Hello, traders. It's 8:01 a.m. Chicago time on Thursday, the 6th of February, 2020. Wishing you a good day so far and a continued good trading day. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, this is episode number 1687. This morning, risk on again. We have another gap. We have another gap, ladies and gentlemen. Is there anything else here? We have so many weak structure points underneath us in this auction, but this market's on a tear. This market, to me, is a perfect example of the old adage that a bull market climbs a wall of worries or something like that. Coronavirus, you have impeachment, you have all kinds of trade stuff, you have war with Iran, you have just just a reality TV saga over the last uh, couple of years, really, and this thing is continuing to tear up. We're trading at new all-time high territories expected in the indices. This morning, crude oils is off a little bit. Had just recently dropped to 50.50 again. Was down about 25 cents and has recovered a little bit. The cable's off. The cable's off and below $1.30 currently. The leaders today are the indices. Risk on. It's an okay risk on sentiment. The Euro Stoxx 50 leading with 29 points, trading at about 3,800. And the DAX is up 86 and a half points. The Dow's up 98. Gold is up $4.60. Trading at 1,567 has come off a little bit, but overall, what is driving? What is the theme today? The theme today is that China announced that it would um, half the tariffs on 75 billion U.S. goods from February 4th as a good faith effort as part of this initial deal with the United States. Also, OPEC is looking to cut 600,000 barrels per day until June. Russia is not on board yet. Often Russia is opposing whatever OPEC is doing. Russia is undergoing sanctions and is very sensitive to the price of oil, a major revenue stream for it. And that's really the news that's out there. That we could see that news actually in the order flow overnight. It came out at 6 o'clock Central or Chicago time yesterday. So that's where we stand this morning. Let's move quickly into what's expected for the session. We did have some numbers. Jobless claims came in better at 202,000 versus 219,000. And there are several numbers from the Eurozone. Looking ahead, really, there's nothing on deck that is of high impact. We do have several Fed speakers. Fed's Kaplan is due to talk in about 10 minutes. Fed's Quarles this evening, and that's about it. Some numbers out of China at 10 p.m. Eastern. Tomorrow is the big day. Tomorrow is non-farm payrolls and unemployment. That occurs at 8:30 in the morning. Expecting 100 the forecast for 148,000. I want to remind you that ADP yesterday came in strong, I think, at 291,000. So expecting that to see a pop there, but we'll see. But tomorrow, other than non-farm payrolls, we have wholesale inventories and monetary policy report, and that brings in the weekend. Uh, so that's where we stand. Let's take a look at what we expected yesterday. Yesterday, the primary scenario is for the market to open in an open auction, dip down towards 33.15 is the area I was looking for. Bounce back up and finish at highs, pushing towards that 33, 37.75, and breaking it into 47.75, the next key area up. Here's what we actually saw yesterday. pretty decent in terms of what we got on scenario one. We did dip down. We went to 1750 instead of 15, bounced back up and then ended up taking out the 15, balancing here, extending the range lower, breaking the IB low, and then coming back. This looked pretty noisy to me, quite balanced at this point. The profile was relatively balanced, and then as soon as I saw this impulse up here, there was a high probability of neutral extreme up, extreme up, which means that we would break the IB high. The initial balance, again, defining that abbreviated IB, is the first hour trading. This is the heaviest time in terms of volume and price volatility historically. In most products, the first hour, market opens, participants put on their positions early, so we track where that is, and then we measure the rest of the day based on that. Now we broke the high, so now we're neutral, and the expectation is we would close near highs, right? So we did exactly that, neutral extreme. I did expect it to struggle here at 33, 37, 75, and push to 47 actually. Was not able to do so, ran out of time, but we still ended up with a neutral extreme up day, a very clean and clear test of the gap. The gap remained open. Remember yesterday, I boxed in the gap in either case. Oops. In either case, I expected a gap to remain open. And that's what happened. I expected it to finish on the extreme. That's what happened. And so what do we expect once we have that kind of situation? Neutral extreme up is is a pretty strong indication of a continuation, and we're looking for a continuation to the overnight session. The overnight ended up not disappointing and pushing up through the mid-century figure and into 57.75. This is on news. The China news came in right in here. China news came in right in here, and it kind of set the tone for the session. You could see that the market was pretty much sideways until then, and then from there on out, we were in this up channel until, of course, the Europeans come in. The Europeans come in, and we generally see a reversal. Once that happens, Europeans hold steady right in the middle of the range. You can see that we have the VWAP mid and the point of control in the same area. The market, although it broke higher, is actually balancing in the overnight session. Pretty heavy volume, a little over 2 times the expected volume for the session. So the activity is relatively the market's relatively active overnight, and that's where we stand currently. The key thing to note here, though, is not only do we have a balanced profile, we do have the market trading on top of mid VWAP and the point of control. The market is tired. In the overnight session, it got tired and is sitting in balance. Both sides are basically backing off. There's a ceasefire here between the buyers and sellers currently, and that's what we're coming into the session with. If I showed you, let me see, if I showed you the volume scope here, the footprint, you could see that once we pushed through, rolled over, and then ever since about 6:30 Central, we've been in this. This is the overnight, this is the full session VWAP, this is the mid, and then we have the overnight point of control all on top of each other, and you can see that the market is testing up and down, up and down. You know, various areas of absorption here, various battle zones all over the place, and overall the market is just pushing up, pushing down, and then so far you could see that the delta activity, the aggressors have taken a break. There's no push in either direction. You can see those bars, those delta bars just holding steady. This is an important chart for me. I don't show it often. but it does give me a good narrative. Here's the here's the announcement. I said, yeah, I said 6 o'clock, but it's really 7:30. Here's the announcement from China. The market pushes up. You can see it pushing into these short-term liquidity pools, pulling back, and you can see that the market's not really poised in any way. When we look at the overall liquidity, we're not seeing a really aggressive stance from the resting orders. There's a bid below, which ties in with the all-time high right here. I expect that this liquidity down here in the 37, 38 area to remain intact as we come in. The market pushes in here. I expect this to trade, likely to get a bounce back into this area before it continues lower. If it does continue lower, it's one way to read it. There's a little bit of liquidity right at 55 even. We are trading around the mid-century figure right here at 50, but the overall map is telling us that there's really no clear directional bias. There's nobody's really stacking the book at this point. Okay, so what is that? How does that inform our trading? Why am I telling you this? It tells us that we are likely to see a pretty choppy, uncommitted market, in my opinion, as we open up. Here's the overnight session. We open back up, dip down into the prior, push up, dip down into the prior range. We get the overnight news, and then we push up. As we talked about. So it's tested up, it's tested down, it's holding steady in the middle. Expect an open auction out of range type open, and expect a choppy open and new all-time highs. The thing with this market, though, with that being said, the caveat here, and I'll show you the composite. The caveat here is when we open at all-time highs, we tend to respond. We tend to respond back. It's just the way the market behaves. If we open at the high, see here we're opening at the high. The bar is red. When we open at the high, we tend to respond. The all-time high, right here, right here, right here. We tend to respond back. So this is the bias, not that I'm looking for confirmation here. I don't really care which way this thing rolls, but overall, I'm going to be leaning to the sell side this morning. I'm looking for the overnight low to be taken out as a component of the overnight stat. So if you don't know what I'm talking about, ask. So here we are, opening right on top of the overnight point of control, as I said, over on top of the VWAP and the overnight the full session mid. I'm expecting an open auction. I'm expecting chop. I'm looking for this gap to get filled. Some liquidity here at 37, and I'm looking for this to break lower into value high from yesterday at about 27, consolidate, bounce back up, and then come back in and potentially check this naked point of control. My bias is downwards today, given the way this thing is set up as a primary. The secondary is an open that drops, pushes into the 37, consolidates, pushes back into the equilibrium point overnight, the accepted price, and then starts to push its way back up and then consolidates into the session. I'm looking for a break of the overnight high, consolidates into the session and finishes somewhere in the middle into non-farm payrolls. So at the close today, we're expecting the market to position for the non-farm payrolls tomorrow. So, those who are in profit might want to hedge their exposure elsewhere with futures by selling into it or squaring up their positions. The tertiary is an open auction that pushes higher, impulses down, comes back in, and pushes right into the overnight, the prior point of control, and tests the value range from yesterday all the way through before the bounce. This is the scenario where we are leveling out and squaring up squaring up again for non-farm payrolls, profit taking at the high, and a spot, a decent spot to provide supply to the market after this big run up. Okay, I'll leave you with that. Good luck today. I'll catch you tomorrow. Convergent members, we have our group mentoring session today at 12 Central, 1 Eastern. Please attend, especially if you're submitted a request to be reviewed. Please be there today. Make sure your mic's working or call in, and we'll go over your results and see what help we can provide to see you to your potential. Good luck.